There are three things I want to discuss with you today. I'm going to share with you some major demographic milestones Australia has just reached, because it's important to understand how our demographics are going to drive the sort of properties that are going to be in continuous strong demand in the future. In my mindset moment, I'm going to teach you who to avoid. We've spent lots of time talking about who you should listen to and who should be your mentors, who should you stay away from. And then Ken Race and I chat about estate planning and 5 essential documents you need. No one likes thinking about their demise, but you better plan for the future because it's going to come one way or another anyway. So welcome to this week's episode of the Michael Yardney podcast.
Welcome to the Michael Yardney podcast, where each week you will learn a number of new ideas regarding success, property investment and money in around 30 minutes. Our show is brought to you by Metropole, who specialise in helping you grow, protect and pass on your wealth through strategic property advice. Now here's your host, Michael Yardney, Australia's most trusted property commentator, who has once again been voted our leading expert in wealth creation. That's the 5th time he's won a similar award in the last 7 years.
To become a successful property investor, you're going to need to own the sort of properties that are going to be in continuous strong demand, in particular by owner-occupiers, and that's going to be driven by our demographics, our changing household formation. That's going to be the best determinant of future housing needs. So today we're going to spend a bit of time talking about a couple of major demographic milestones Australia has reached, and it's important for you to understand how our demographics are going to be changing in the future because of this. We've got a few other things to discuss today as well, but first let's just spend a couple more minutes talking about the demographics, because if you drive through our big capital cities, you're going to find our skylines dotted with cranes busy at work on many of our city's new residential towers. But it's had me wondering, who's going to occupy all those little boxes in the sky? Our research at Metropole on future demographic changes has helped us pinpoint an imbalance in the type of housing that's being built with our key buying groups, what they want and what they can afford. Now, if you think about it, there are 3 groups of people in the property market. Number 1, there's the young renters moving out of home. Then there's the first home buyers. The next group is the upgraders. They're moving to the next homes. They're getting bigger homes as their families grow. Then there's the downsizers, the retirees and the aged care market. Now, our research suggests that demand from young renters and upgraders is going to be declining in the future. And the standout groups, the main drivers of Australia's housing demand over the next decade or so, are going to be the first home buyers and those downsizing and the retirees. Now, it may surprise you, but the average age of first home buyers is now 35 to 44. They're getting older. And generally for this demographic, there are 3.3 people in a household. We're getting older, we're having children later. And this group is projected to take up about 20% of our total new housing demand over the next decade. And what are first homeowners looking for in properties? Room to grow and probably an opportunity to add value to improve their property as well. Of course, for them, affordability is a big consideration as well. So the preferred style of accommodation for these home buyers, they're going to vary depending upon the state and depending upon people's income. But in general, first homeowners are now opting for inner city apartments. Some will, but ones that are big enough to accommodate a family, or they're going to look for townhouses or duplexes or small houses in our middle suburbs. Sure, some are still going to prefer larger detached houses in the outer suburbs, but we're not building enough accommodation for those sort of people at the moment. Now, the downsizers, another big driving factor in the next decade, are going to be those aged between, say, 60 and 74. And on average, in each of those households, there's 2.1 people. Almost all of this group have no children living at home, and about 3/4 are couples or live alone. So downsizers are projected to take up 32% of the total new housing demand over the next decade. Now, I know as an investor, you're not planning to sell your property, but you want the sort of property that's going to be in continual strong demand by a demographic group that can afford to and be prepared to pay for similar properties around yours, pushing up the values. And so why not own the sort of property that would appeal to downsizers? And some will actually rent for a while anyway. What they're looking for is low maintenance, convenient, convenience. People want to downsize in the locations where they have been living, but in small projects, not in large projects. They're going to want to still have accommodation that's in the vicinity of where they lived before, so they can go to the same hairdresser, the same dentist, the same doctor, the same shops, but they're looking for townhouses, villa units, in the middle ring suburbs in particular. So Australia's housing demand, our needs are changing, and it's going to be important to understand the demographics that are going to drive this. So in a moment, I'm going to share with you two major demographic milestones we've just reached and how they're going to affect our property markets. I'm also going to share with you my weekly mindset moment, and thank you for all the great responses I'm getting to this. I'm getting emails, I'm getting lots of reviews on iTunes saying how important you're finding these mindset moments. I appreciate that. We're going to talk about people you shouldn't be hanging around. And then we're going to have a talk with Ken Race about 5 important estate planning documents. Now, in this show, I try to help you grow, protect and pass on your wealth. We're going to give you all of those things today, including this estate planning segment. So even if you're not planning to cark it soon, you're going to get some great lessons from our show today. If you've been listening to my podcast for a while or following my blogs, you'd know that I'm interested in demographics. How we live, how many of us there are, how we want to live, how the way we're living is changing. Because in my mind, demographics is going to drive our property markets in the future, much, much more so than interest rates or change of government or all the other minor factors. So today I'd like to discuss 2 trends that have occurred over the last little while. And the first one is that a short while ago was a special day in Melbourne. For Melbourne. No, it wasn't the AFL Grand Final, which, if you don't know, is a religious holiday here. And it wasn't the Melbourne Cup, which I guess is another religious holiday. But at the end of August, it was the day that Melbourne's population was forecast to reach 5 million people. Now, Melbourne's not only Australia's fastest growing city, but Victoria is Australia's fastest growing state. And while Victoria compromises just over a quarter of Australia's population, it currently accounts for more than a third, about 37% of Australia's population growth. Now, let's just have a look at how fast Victoria is growing. In the last year, Victoria added 143,400 people. That's about a population growth of 2.3%. And that's larger than the growth of New South Wales, South Australia, Tasmania, Northern Territory and the ACT combined. In the last year, Melbourne added 125,424 people, and that's the largest annual increase of any city in Australia's history. You know, it's actually the equivalent of adding 1 Darwin to Melbourne every year. In addition to contributing 37% of Australia's population growth, Victoria also accounts for 35% of Australia's net overseas migration and about 29% of Australia's natural increase. So in other words, we're even getting more migrants in than anywhere else. So there are 3 factors that are contributing to Victoria's fast growth. The net overseas migration, people coming from overseas, net natural increase, we're making more babies, and net interstate migration. People are coming from interstate to Victoria. And this has happened because of Victoria's strong economy and our jobs growth. Now, while the Melbourne market's having a bit of a breather at the moment, it's a little bit flat at the moment, of course, all these factors are very positive for the long-term prospects of the property markets in Victoria. And that's giving me confidence to keep recommending it to our clients, and I'm personally investing in it still myself. So Melbourne hit a milestone of 5 million people and has had the highest average growth of any city in Australia since 2011, averaging 2.55% per annum. But in the last 12 months, as I said, it's actually increased to 2.65. Based on its current population growth rate, Melbourne's going to hit 6 million people, another million people, by 2025. And interestingly, that's the same year Sydney's going to reach a similar population of 6 million people, which means that following on from that, from 2026 or so, Melbourne's going to overtake Sydney as Australia's largest city. Based on the current growth rate, Melbourne's going to reach 7 million people, add another million people by 2031, and 8 million people by 2037, with Sydney not reaching that till about 2040. Now, these are forecasts. It doesn't necessarily mean it's right, but I guess it's the trend that we've got to look at, and it's the trend that's going to suggest that you've got to understand where these people are wanting to live, where they're going to live, how they're going to live, because if you own the sort of property that's going to be in continuous strong demand, in particular by owner-occupiers, those who can afford to buy property and pay extra for property, you're going to become a successful investor. Now, let's look back for a second and see how we got here. There's some interesting insights into the growth of the two big super cities of Australia. Sydney's population reached 4 million people in 1999. It took Melbourne 10 years longer to reach that milestone. Sydney reached 5 million people, and it went up another million in 2016, but it's actually taken Melbourne only 2 years to do the same. So these two cities, as I said, are going to reach a population of 6 million people in 2025. That's not too far away, and from then on, Melbourne's likely to beat Sydney. So clearly, there's going to be more of us in the future. Australia's population has doubled since 1970. In fact, it's increased around 6 times since Federation in 1901, rising from about 3.8 million people then to nearly, well, just over 25 million people today. And while we're living longer, it's really the changes in our migration policy over time that have been a major contributor to our population growth. Today, immigration accounts for close to 2/3 of our population growth. And if you go to do a Google search on population clock or Australian population clock, you'll find exactly where the Australian Bureau of Statistics is estimating our population is. And there's some interesting figures when you look at it. First of all, they say we're having one birth every 1 minute and 42 seconds, one death every 3 minutes and 16 seconds, one person's arriving into Australia every 1 minute and 1 second. A new person's coming to Australia, a new immigrant every minute. One person is leaving Australia to live overseas every minute and 51 seconds. But if you add all that up, subtract it, etc., what it leads to is a total population increase of one person every 1 minute and 23 seconds. Our population's going up by one person every less than 1.5 minutes. So all this means we're going to hit these future milestones faster and faster. Australia's population is likely to grow to 26 million by 2020. 30 million by 2030, and a whopping 40 million by 2048. Now, remember, Australia's got a business plan to do this. I know the government's tinkering at the edges a little bit, saying, oh, look, maybe we've got to slow our migration down, but it recognises that we do have to import these people to bring down our average population age, to have more people in the workforce as baby boomers are retiring. Because a couple of years ago, there was a concern. As the baby boomers retired, there weren't enough people left in the workforce to pay the taxes to cover the baby boomers, because we know most of them aren't going to have enough savings or superannuation to see themselves through. There's not going to be enough money in the pension system for them unless more people keep paying taxes, and they're going to be using the healthcare system more because they're going to live longer, but they're going to be getting sicker. So the government recognises that we do need to increase our tax revenue, and so it's bringing people in. Now, of course, all this is going to lead to certain problems as well. Strong population growth, yeah, it's going to underpin our property markets, especially as the bulk of these people are going to be coming to 4 big capital cities. And a lot of these people are in childbearing age, is that the right word to say, or in the household formation age. So they're going to be in the workforce, they're going to be paying taxes, they're going to be buying refrigerators and televisions and carpets, they're going to need accommodation. That's all good for our economy. But it's also inevitably going to cause our cities challenges because they're not designed to accommodate such large volumes of people. And if you think about it, most of these people are going to be living in medium and high density accommodation in the future. Our infrastructure is going to have to catch up, and our government is going to have to get their acts into gear if they're going to wish to maintain the status that our great cities around Australia have earned of being amongst the best places in the world to live. So, yeah, there's going to be challenges, but I wanted to just point out that the long-term future of property in Australia, well, in our capital cities, and in particular in our 3 big capital cities, is assured because people have to live somewhere. That's going to give us comfort, plus the fact that these people are going to have jobs and be able to afford to live somewhere, but how they're going to live is different, and we've discussed this often before. More medium and high density accommodation close to the CBD, close to public transport, walkability, all that's going to be important as our cities become so much bigger. We're coming up for a short break now, but stick around because when I come back, I'm going to share with you my mindset moment. I love sharing these messages where I'm going to help you become more successful in all areas of your life. And then we're going to have a chat with Ken Race about 5 essential estate planning documents. And even though you're not probably currently planning your demise, no one wants to think about that. These are important as part of your structuring to make sure that you can grow, protect and pass on your wealth in a way that you want to in a tax efficient way. So I'll be back in just a moment.
If you're unsure what to do next in our changing property markets, why not turn to the proven and trusted team at Metropole Property Strategists to take advantage of their expertise of profitably investing through the last 5 property cycles. The team at Metropole have been involved in over $3 billion worth of property transactions, creating wealth for their clients, and they can do the same for you. They don't sell property, so their advice is independent and unbiased. Metropole can devise a strategy, their buyer's agents will buy your property for you, or you could use their renovations team, property development, or portfolio management services. Arrange a time for an obligation-free chat at metropole.com.au. Now here's Michael's mindset message. Remember, a change in your thinking will lead to a change in your life.
If you think about it, one of the most important decisions we make in life is who we choose to be around. In fact, there's an old proverb that says something along the lines of, show me your friends and I'll tell you who you are. I remember my mentor when I was young, the late Jim Rohn, said it well. He said, you're the average of the 5 people you spend the most time with. So based on that, we must be cautious about who we surround ourselves with because of both the short and the long-term implications. On the one hand, we need people, whether they be mentors, friends, family. We need people who are going to challenge us and make us better, raising our averages and helping us reach the heights we deserve. Yet I know many entrepreneurs, business people, investors I deal with, they want to be the smartest people in the room. But if you're always the smartest person in the room, you're in trouble. You need to surround yourself with people who can run circles around you in as many areas as possible, people who are exponentially better than you in a variety of ways, because they're going to help you grow to the next level. But at the same time, you're also going to need to learn to avoid certain types of people. Now, just for a moment, think about the people who you work with or who you interact with on a regular basis. Have you met Mr. Negative? Have you met the critic? Have you met the victim? Now, I bet you're picturing one of those folks right now. I know I am. You'll find them everywhere. Some of them are permanent property pessimists. Others torpedo your business ideas or your career goals. By the way, I hope you're not looking at one of those in the mirror. You see, pessimists spread negativity like the flu, so you've got to limit your exposure to them. The risk is listening to these naysayers means your own thoughts might eventually echo what they're saying. Because remember, you're the average of the 5 people you hang around with the most. Because these people have got the power to adversely affect not only your outlook, but also how high you aim to achieve. So for a moment, let's take a closer look at these 3 people I'm suggesting you try and avoid so you can sidestep them where possible. Number 1, Mr. Negative. You know, they always seem to have a problem for every solution, and they love to drain your enthusiasm from any new idea. They'll say things like, that can't be done, or that won't happen, or maybe, you can't get rich through property investing. I know somebody who's lost all their money. These people, Mr. Negative, stuck in their negative world, and when a window of opportunity opens, he pulls down the blinds really, really quickly. Worse than that, he's going to sap your energy, and he's going to slow down your momentum. You can't expect to lead a positive life if you surround yourself with negative people. So the first person you should be avoiding spending time with is Mr. Negative. The second person is the critic. Look, critics are known for finding something derogatory to say about everybody. And they're especially famous for trading confidential or negative information about other people. They're not going to say good stuff. They find a way of gossiping, and they bond and control small-minded people. Make sure you're never tempted to engage in their shenanigans, because everyone's fair game, including you. If you think about it, if they're going to talk about other people behind their backs, why wouldn't they do that about you? Why wouldn't they talk about you when you're not around? Of course, the reason they're like this is critics are threatened by talented people, by successful people, and the greater your success, the louder their criticism, because I think what they're often doing is hoping it draws away the spotlight about their own unimpressive results. So never let anyone who's done nothing tell you how to do anything. And the last person you should avoid is the victim. You know the type. They never accept personal responsibility for things that happen to them. Life's chronically unfair to victims. It's never their fault. It's not their fault. It's the government's fault. It's the system's fault. It's their parents who gave them a poor education. They can't get into the property market because they're somebody else's fault, the bank's fault. The deck's always stacked against the victim, and they've got nothing but bad luck. They haven't yet figured out that hard work puts them in the place where good luck finds you. And they're famous for putting in a little effort. So they're the three people or types of people to avoid. But at the same time as weeding out these negative people, as I've said, it's important to surround yourself with positive people, because their character traits and their habits, they're also contagious, but they're contagious in a good way. Look for encouragers, look for believers, look for high energy movers and shakers who don't have can't in their vocabulary. So you should be surrounding yourself with people who dream bigger than you do, people who believe anything's possible, because they're going to believe in you. Of course, it's also critical to watch your own attitudes. It's really easy to talk about other people and judge other people. What about you? Because you can't always change the people or circumstances in your life, but we can change our response. Excellence isn't a skill, it's an attitude, and positive thinking breeds rich habits and breeds success. So watch out what others are thinking, but watch out what you're thinking, because I've heard it said that success is never owned, it's rented, and that the rent is due every day. So my recommendation to you is build a good team around you of the right people, and they're going to help you pay the rent. Estate planning is different for everyone, and especially in today's modern environment where there's so many blended families. So with more people remarrying, it's really critical to prepare for the distribution of your wealth on your passing. Not something we like to talk about, but it happens. Now, last week on the podcast, we had Ken Race answering Joanne's question about the need to prepare a will. And as we were discussing this, we realised that there's lots more involved. And so today I'd like to have a talk about estate planning with Ken Race again and understand some of the critical documents you need to prepare. So welcome, Ken Race.
Oh, thank you, Michael.
Now, Ken, for those of you who don't know, is Director of Metropole Wealth Advisory, and while he's an accountant and a financial planner and a successful property investor, he helps our clients grow, protect and pass on their wealth. But in particular, you're very interested in estate planning because it's something a lot of people don't think about, Ken, until it's a bit too late.
That's certainly correct. And I think it's part of our mantra of helping clients grow, protect and passing on their wealth. Because you want to be able to pass on that wealth in the most effective and efficient manner without necessarily paying taxes that could have been avoided, and then to protect those assets in future generations. So the will and your estate planning is quite critical to that very central component of wealth creation.
Well, people have a property plan. They sometimes have a finance plan. They have a plan for where they're going on holidays and all the rest of the things, but they actually don't plan for the next stage for passing on, Ken, as you say. So there's a number of documents that I believe are important. And this is really regardless of what your age is, what you feel your health is, and even, to be fair, your level of wealth, because we've all got something we want to pass on. Sometimes it's sentimental things that you want to pass on. So, Ken, let's go through the critical documents that one needs to prepare. What's the first one?
Look, you've obviously got to have a will of some sort, but within a will, I think it's very critical to set it up so that your wealth is passed on not directly to your descendants, but via a trust. And that is called a testamentary trust. And that is to me, one of the most important components of your estate planning, because that will protect those assets to stay within the family and will greatly reduce potential taxes that will apply on the income or capital gains from the sale of those assets by subsequent generations. So testamentary trust to me is critical as part of your will.
Now, that's really interesting because, unfortunately, I lost my mother 2.5 years ago, and she had been given that good advice, and it has made a significant tax benefit to us, to my kids and to my grandkids, and it actually it has been very instrumental in making it easier for me to make life easier for my kids through paying school fees and other things in a non-tax deductible way, because you can distribute income to minors through a testamentary trust without paying the tax.
Correct. So income to a minor is normally taxed at 66% on a sliding scale down, but income via the testamentary trust, the child is taxed at the adult tax rates, which is $18,200 tax-free.
Yeah.
So that is just a small benefit of the testamentary trust that can make a significant difference with the available cash moving forward.
Now, I think we've got to give a disclaimer here right at the beginning that this is not individual tax or financial advice, because I know with your financial planning hat, you can't give this because we don't know what the person listening to this is thinking about, what their situation is. But if they want to understand more about that, go to metropole.com.au and click on Wealth Advisory and have a chat with Ken and his team. Now, Ken, a will handles things that are yours, your own estate, but there's a lot of stuff that we own, whether it's super, whether it's things in trusts, that actually are not. I'd actually had very, very little in my name, and I think that's the same with a lot of successful business people and investors. So how do you handle those?
Yeah, so they're called non-estate assets, and the biggest one for most people is superannuation. So money in super is not yours. It's a funny thing to say, but it's not yours. It's part of the super fund that is set up to generate retirement income for you. There's a couple of different documents that people can use. The more traditional one is what's called a binding death nomination. But people with more complex wealth, blended families, larger superannuation balances use what's called a superannuation will. The problem with the binding death nomination is, particularly if it's used in a self-managed super fund environment, it's a very technical document, and if incorrectly drawn up, can be easily challenged by other people in your family group.
I guess it gets back to what we said last week, that you can't get a $30 will kit or go to wills online type thing. What you really got to do is get a good estate lawyer working together with your tax consultants to advise you. What about an enduring power of attorney? What's that all about, Ken?
So think of the will as the document that kicks in on your death. So on your death, your instructions in the will are then carried out by your executor. But if you don't die, you could be in a coma, you could have dementia, you're incapacitated in some way, then your will doesn't start. So you need what's called an enduring power of attorney to pass decision-making to other people. The beauty of that document is it can be as broad as, I'll allow that other person to make any decision that I would have made, to one that is very specific. You could give people specific powers, maybe to sign a contract. So the enduring power of attorney can be used while you're travelling. So recently, for my daughter, when she was overseas, we needed to sign the contract of purchase because she was overseas at the time. So she gave her mother specific power to sign that contract of exchange on the purchasing of that property. So that is a very critical document, either in the unfortunate circumstances of incapacity or if you're unavailable due to travel or other reasons as well.
What about medical issues, though, Ken? I've heard of people having a sort of medical power of attorney. What's all that about?
Yeah, so that's, because it's medical, as does the normal power of attorney, they're very state-based documents. So we must follow the particular rules in the state that it's drawn up in. But the medical power of attorney helps you finalise your wishes in relation to things like organ donation, because it's a funny thing. On death, the people, your spouses, as an example, your dead body becomes their property. So while you may have asked...
That's different from when you're alive, is it?
What's yours is mine and what's mine is mine.
Yes.
I'm saying.
Yes.
So while you may have wanted organ donation, then those wishes can be overruled by someone who now owns your body. So that allows you a more legal way to pass on organs. It also allows you to determine when they turn off the life support system, as an example. So our relatives don't like to think that they're going to cause our death. So many of us hang on maybe far too long before making that very, very sensitive decision to turn off the power. So the medical power of attorney can actually dictate a whole series of things, non-resuscitation, turn off the switch, etc., which then the medical providers will follow.
Okay, there's another document that's really not a legal document that I think one needs to prepare, and that's all your personal details. You've actually got to have this all written down somewhere, a list of all this, including, I guess, your passwords and your logins and your various bank accounts and where you've hidden the jewellery and things like that.
Correct. One of the most unfortunate things, I remember when I was more in the accounting arena, a lot of spouses came to me saying, what is my spouse's account numbers, passwords? And obviously I didn't know, because people don't divulge that level of sensitivity normally to their accountant. And the surviving spouse then doesn't know what there is and where it is. So a significant issue is prepare a list of where all the payments are made, what bank accounts, what for, the relative passwords. And nowadays there are systems and programs you can buy to help make that an easier function, or you use the cloud-based systems which are free. And a lot of my clients will put the data in one area and the passwords in another. And then that way the executor knows where to go and look to actually understand what your issues are. Unfortunately, we had the spouse of a deceased client who came to us who found out that they were paying for subscriptions many, many years after the death of the partner. And that's because it had been set up via credit card and it had never been cancelled.
Terrible. So in summary, prepare for the inevitable by smart estate planning, by having somebody on your side preparing a number of documents, including a will, preparing for your non-estate assets, having an enduring power of attorney, having the consideration of a medical power of attorney, and also just having that simple document explaining where everything is, what accounts you've got, what passwords you've got. Ken, thank you very much. And if our listener wants to understand a bit more about this and have a chat with your team, I know they can go to metropole.com.au, click on the Wealth Advisory tab and find out all about your team services. Thank you so much for your time, Ken.
Thank you, Michael.
As we're coming to the end of today's show, I'd like to ask you to share this episode with somebody else. So hopefully you got benefit from it. So let's pass the message forward and help lots more investors grow, protect and pass on their wealth. What I'd like you to do is just click at the bottom of your player on the iPhone. There are 3 little dots there and there's a share button, and what you do is just pass it on somehow to others. And it'd be really great if you could leave a review, because the reviews help iTunes know that you're enjoying the show. I'm so pleased we're ranked amongst the top business podcasts in Australia. But if you leave me a review and I read it out on this show, I'm going to gift you any of my books. Just email me at michael@metropole.com.au when you've left a review. Now, I got one from Dylan who said, I've listened to many property podcasts and Michael Yardney's is by far the best. Michael's teachings are always relevant and are delivered in a clear and concise manner. So clear and concise, in fact, that on a number of occasions I found myself listening to multiple Michael podcasts in a single sitting. There's something about Michael's voice that keeps wanting more. Never in a million years would I hesitate to recommend the Michael Yardney podcast to friends and family. Gee, they're really, really nice words. I really appreciate it, Dylan, and I look forward to returning the favour by gifting you one of my books when you email me. So that's it for today. I look forward to being with you again next week as we teach you something about property, success and money in around 30 minutes.
Thanks for listening to this week's episode of the Michael Yardney podcast, which was brought to you by Metropole, who help their clients grow, protect and pass on their wealth through strategic property advice. If you got value from today's show, we'd really appreciate it if you would leave a review and we'll read it out on a future show, and Michael will gift you one of his books as a way of saying thank you. Just go to michaelyardneypodcast.com/review and let us know what you think. If you don't already subscribe, head over to iTunes or your favourite Android app. You'll find us there as Michael Yardney Podcast. If you'd like to gain instant access to the show notes, head across to michaelyardneypodcast.com. Watch out for our show next week. You'll learn some new ideas about property investment, success and money in around 30 minutes.